back. A tough year is going to get even tougher on our pockets. The Reserve Bank is likely to hike interest rates by 0.25%. The bank's Monetary Policy Committee is set to meet today, with some analysts forecasting another spike. We're now joined by Economist Phelisa Nkomo for more. Thank you for your time, Phelisa. Good morning to you. What can we expect from the Reserve Bank today?
Yes, I think the Reserve Bank is going to be caught in a rock and a hard place actually during their discussion tomorrow at the Monetary Policy Committee, because one of the things that it needs to grapple with the domestic economic challenges, but at the same time take into account what's happening between Russia and Ukraine, which seem to actually to affect us very badly. For instance, South Africa imports 32% of its wheat from Russia. So obviously it's quite clear now, because Russia is really not focusing at ensuring that it passes on goods into the global market as an exporter, but also it's focusing on dealing with their own, domestic challenges within their own backyard. So I do think that South Africans will have to start buckling up and expecting an increase in terms of interest rate, because amongst the key issues that, Russia is the second fuel exporter in the world, and as I mentioned, around wheat. So there is going to be a very difficult conversation in the room. I wish I could be a fly and really hear what is it that members of the monetary policy would actually be saying in the final analysis. But just the last point, just to say, yes,
continue with your point.
Yes, the trends now, in fact, are starting to, countries are starting to increase the interest rate. You saw the Fed in the week. I actually watched the Fed Reserve Bank, and they've also increased the interest rate by a quarter. And the most interesting thing, though, they then said one of the things they're going to do is to also buffer the economy by reducing their reserves. So meaning that that's why I would be keen to hear whether the central bank and the MPC, it's something that they're actually going to be considering as part of buffering the economy, taking into account the high indebtedness, for example, of South African households. And in fact, what we've seen now, the fact that we've not seen the recovery in terms of industrial output, but also at the same time, we've lost about 3 million jobs in the last 2 years.
And that was my next question, to say, can South Africans even afford this rates interest at this point? And you just took the words out of my mouth when you spoke about, the high levels of unemployment, which I'm sure the President will highlight today at the investment conference, but also the indebtedness that many South Africans have come to find themselves in.
Absolutely. In fact, by the way, any interest rate, by the way, actually has negative impact on two fronts. The first one, it's spending on households, but also it takes away the surplus income at a household level. So it means that households who for any other reason might have even a smaller surplus, in the last few months, it means that's going to be taken away by interest rate, right? But knowing very well that the majority of South Africans were Black people who in fact are connected to several households, whether it's to a sister or brother or even in rural communities. So already a lot of people who are active in the economy in this country are supporting their relatives who might have lost jobs or younger siblings who are still at school. And then the second issue, it's also from an investment perspective. And that's what I would be keen to hear what the President is going to be saying, by the way. Because again, when interest rates are higher, when the country interest rate, it means that, again, from an investment perspective, is that firms are not going to be taking up credit, from the bank to actually make sure that they expand their own industrial outputs. The reality now is that these are the just two important groups that you need in the economy, because amongst those is one, it's sitting on the supply side, which is the business sector, and the other one is household goods sitting on the demand side. And these are two important economic actors in the economy. Hence, my opening statement was that, Reserve Bank is actually caught in a rock and a hard place, because it needs to make sure that it balances up. And already we've seen other increases recently. Part of it was to cushion the issues of, a global supply chain. But now it's actually going to be even much more worse. Right. And I do hope that there's a better plan from an economic perspective, from an industrial development perspective, to help those families who are really going to be struggling, including the rest of the economy.
But also, where does that then leave the government's economic recovery plan? We often hear from, the president, even during his State of the Nation, talking about an economic recovery plan. Does it set him back? Or does it, of course, paint rather a promising future for South Africa?
No, it does set it back, Tumelo, because amongst the key things, it means that government would have to now start tapping into its own resources and looking at what is it that it needs to do from an industrial perspective. Now, you mentioned the point around the recovery plan. Amongst those, it means that government will have to spend a little bit more so that it's able to stimulate the economy. It supports the small, medium enterprises who have probably been out of business because of COVID, but also at the same time, medium sectors, because we know that South Africa is a medium, is a light to medium industrial country. So in essence, it means that it needs to support that, it needs to tap on its resources. But also the third issue is that the economic architecture of those resources is going to be very important. Amongst those, we need to make it sure that the funding that actually the state wants to put on the table as part of its economic recovery. In fact, we still don't know how the 500 billion that the president had put up, about 18 months ago as part of the socio-economic spending, how it got spent. And I know that one of the key issues that firms were encouraged to access loan schemes through the bank. We still don't know the data of how many who they've been. We were encouraged to hear the National Treasury to talk about the bounce back, which is the 15 billion allocated loan guarantee scheme, which is allocated for SMMEs. But so government really needs to really get its hands very dirty on this one and make it sure that it lifts up its economy, because they are the hope of the poor households, but also they're the hope for the firms that have been ailing and struggling to get off the ground in the last 2 years.
Well, we leave our conversation there, and I appreciate you speaking to us this morning. Economist Phelisa Nkomo, thank you so much for your time this morning.